Welcome again to Crypto Espresso, your teeny tiny shot of daily crypto headlines. I'm your host, Andrew, and it's Monday. And if you thought Monday itself was bad, don't take a look at your crypto portfolio. Bitcoin's price has fallen to its lowest level in a month after dipping to lows of about $38,700 on Monday. The world's biggest cryptocurrency has fallen by about 20% from highs of $48,000 as of the end of March. Bitcoin's painful pullback coincides with tax day in the US, and Americans have until the end of Monday to submit their income tax returns. Some analysts have suggested that investors may be selling off some of their crypto holdings in order to settle their outstanding liabilities. But tax isn't the only threat on the horizon, as Bitcoin remains closely correlated to Wall Street, rising and falling in line with major indices. The tense standoff between Elon Musk and Twitter is getting even messier as it heads into a third week. Tesla's CEO said that during a TED Talk on Friday he has a plan B if his offer to buy the social network is rebuffed. Meanwhile, the social network has embraced a poison pill strategy that's designed to make any hostile takeover much harder to achieve. If a single entity owns more than 15% of the company, which would be more than Musk's current 9.2%, other shareholders would be given a chance to buy Twitter stock at discounted rates, diluting their stake. Right now, it seems that Twitter is in a very sticky situation, regardless of whether Musk succeeds in his takeover bid or not. Renowned DeFi developer Andre Cronje has criticized the crypto world in a blog post and says he now believes that the industry needs to be regulated. The Why Earn Finance founder, who sensationally quit the industry earlier this year, claimed that many crypto projects are being built by people who read Wikipedia articles on complex monetary policy and think they can do better. Cronje also spoke of his disdain for crypto culture, concepts like wealth, entitlement, enrichment, and ego, and argued that greed is strangling crucial principles that the space was built upon. The millionaire believes that regulation is necessary to protect investors, writing, "It's like a child trying to stick their finger into an electrical outlet. You stop them before they can learn why they shouldn't." And finally, frustrated at being unable to gain full regulatory approval in the UK, reports suggest that crypto company Copper is now plotting a move to Switzerland. The crypto firm remains subject to a temporary registration regime with the Financial Conduct Authority, even though a March 31st deadline has come and gone. All of this drama could be especially problematic for Lord Philip Hammond, the former British Chancellor who joined the company as a senior advisor last year. Lord Hammond currently holds growth shares that are worth as much as $15 million as of Copper's last funding round. But the current setback could cause the value of the war chest to dwindle, as potential investors in Copper consider pulling out. And speaking of pulling out, I'm pulling out of using that as a segue. Like this video, subscribe to our YouTube channel, and click on that little bell icon to get buzzed whenever a new Crypto Espresso video goes live. If you want more info on our headlines or crypto in general, be sure to ask Alex in the description below. Alex is a great source of all things Web3 and the metaverse. And with that, I've been your host, Andrew. These have been your headlines, and we'll see ya tomorrow.